Welcome to the Australian Property Podcast, helping you achieve success in property, featuring your host, Jonathan Preston.
Hi guys, thanks very much for tuning back into the show. So in today's episode, I want to talk about rental demand and rental prices increasing. If you'd like to get in touch, I'd love to hear from you. Send me an email at jp@australianpropertypodcast.com.au. All right, let's get started. All right, so I want to discuss today a bit around rental demand at this point in time, and particularly discussing Sydney. Sydney, we obviously have seen quite a lot of construction in recent times, a lot of units going onto the market, and so there are a lot of concerns from people that prices are way overblown, that the demand coming onto the market is going to make for investments, particularly those that are units, to be a bad investment for those that have bought them. And I just wanted to talk about some actual figures today to go through this in a bit more detail, because I don't necessarily agree with all the people that are touting such doom and gloom. So the first point I want to talk about is that Sydney, Parramatta and Rockdale, those three local government areas, have added more than 5,200 new apartments in the past year. Now that might sound like an astronomical figure, and to be honest, I think it kind of is, but based on the rental deposit analysis, rents still increased by 5% over that period. So they didn't fall significantly, they didn't even hold stable. They actually increased by 5% over that time. So in my opinion, that's a pretty, that's a very strong factor. And it really indicates that the demand really exists. I think that, as I've talked about for a long time, there's kind of built up demand where there are a lot of people living in share houses, a lot of young people living at home that want to move out, and there is the ongoing migration. And the people that are living in share houses and the people who are living with their parents, if prices were more modest or their incomes were to increase, they would go and rent a place by themselves, or potentially just with their partner, something like that, but more or less form a new household. And forming new households is what causes for pure rental demand. And so basically with that, I think that even though there is new supply coming online, there is a lot of sort of supply, or demand I should say, waiting in the wings to take up that new supply. Now, to talk about the areas that are actually growing the fastest, if we talk about Hurstville, the rents are growing between September 15 and September 16, 11.63%. So that's a huge jump in a year. Auburn up 11.11%. Mossman up 9.82%. Manly up 9.38%. Marrickville up 8.89%. And Marrickville is undergoing significant gentrification right now. Beautiful place to go and particularly have some amazing food if you haven't been there recently. Waverley up 8.8%, Rockdale up 8.16%, Burwood up 7.55%, Willoughby up 6.03%, and Woollahra up 5.6%. So definitely some huge figures in terms of rental increases. I think this really indicates that it's not like things are trickling along and just holding steady or going up 1% or whatever. Look at Hurstville, up nearly 12% in a single year. So that's something you really want to see as an investor. And when it comes down to it, in the end, the rent is the true barometer of value, because what you really want out of an asset is what it yields. You don't really want to hold assets that generate nothing, for example, land or just holding gold. The problem is that, they don't generate anything. Now, gold, there are sort of some exceptions to the rule where you can kind of lease out your gold, and that's another conversation. But more or less, these are assets that almost sit as a store of value and don't have yield. But when you have an asset like a property that you can rent out every week, the only real measurement, that you can use to really, see the true value of that asset is the rent. And if we look fast forward, let's say we go to 30 years ahead from now, if rents are like 5 times higher, then, it's not like prices are probably going to be the same, because the yield will be so attractive that, people would buy them at that price. So the real, indicator of value and the real, thing that will encourage people to buy over the long term is going to be rents going up. And if you have something that is a strong yielding asset, there is good demand for it, then it attracts, a lot of people. It attracts people who want to buy and invest for the long term. It invests people who want to buy assets and retire based on living on that yield. And they naturally will pay themselves in terms of, covering, most or all of the interest payments. Now, obviously, there are a lot of variables there in terms of the interest rate, everything like that. But you get my general kind of point that if you have a high yielding asset, then it certainly makes for an attractive investment for a number of people. I do also want to mention that rents in the Blue Mountains rose by 14% over that period. So Blue Mountains becoming a bit more of a established satellite of Sydney, if you will. While it kind of has been like that for some time, I think it has become much more commonplace for people to actually, live in the Blue Mountains and commute to Sydney every day. You obviously have a bit more value out there when it comes to buying houses in particular. And while historically people have considered it to be a substantial commute, and look, it is, it's becoming more real for a lot of people in Sydney that's what they're going to have to endure. And I don't know, I personally know a lot of people that live in the Central Coast, that live in Wollongong and live in the Blue Mountains, and they commute to Sydney. So I would say that this is a growing trend, and I would say a 14% spike in rents is not because of a spike in the economy in the Blue Mountains. It's because of the number of Sydney-siders who are relocating there and are commuting to Sydney, and they're seeing what value they can get in the Blue Mountains relative to Sydney, and they're just enduring the travel. I think that as we see jobs locate in some cases, to other parts of Sydney, perhaps a bit more to Parramatta, things like that, we will see more and more of this, because the commute to somewhere like Parramatta from the Blue Mountains is much shorter than if they were to travel all the way to the CBD. Now, I know they've talked about this kind of move for a long time, and it's not really happening at a really quick pace, but I think that over time businesses will see how much cheaper it is to rent in these other areas as opposed to having a business located in the CBD. And so there will be, I think, further businesses locating to areas outside of the CBD, but this is definitely not a sure thing, and this kind of talk has been happening for a long time already, so don't expect that to happen overnight. I want to quickly cover as well the most sought after suburbs for renters. This is some figures. These are figures provided by realestate.com.au, and they are separated by houses and units. Houses, I'm just going to go through the list here. So number 1 was actually Burleigh Heads in Queensland. Second was St Kilda East. Third is Abbotsford. Fourth, St Kilda. So Victoria having a strong showing there. Palm Beach was number 5 in Queensland. Burleigh Waters, number 6 in Queensland. Surfers in Queensland, number 7. South Melbourne, number 8. Richmond in Victoria, number 9. And Fitzroy, number 10 in Victoria. So definitely Victoria and Queensland having a very strong showing in terms of houses. To talk about units briefly, most sought after, number 1 was Coolangatta in Queensland. Number 2, Palm Beach in Queensland. Number 3, Burleigh Heads in Queensland. Number 4, Mermaid Beach in Queensland. Number 5, Clifton Hill in Victoria. Number 6, Sandy Bay in Tasmania. Number 7, Tweed Heads in New South Wales. Number 8, Hobart in Tasmania. Number 9, Freshwater in New South Wales. And number 10, Carrum Downs in Victoria. So Queensland having a really strong showing in terms of units there. I don't know whether this is a bit of kind of interstate migration, being considered by a number of people. I know I personally like to do a bit of searching occasionally of sort of the luxury houses and apartments in Queensland, particularly around, the surfers area, just because the value that you get there compared to Sydney is amazing. But how many of these people will actually turn into genuine renters and genuine buyers? Who knows? But it certainly seems that most of these locations, I would say particularly for units, appear to be kind of lifestyle change kind of areas. Certainly not the whole list, but a lot of them I think, might be people sort of coming home from work or sitting there on the weekend dreaming about making a change from their current lifestyle. But still, you do have to give a little bit of credibility to these factors. I think that, if you're looking at investing in any of these areas, it's certainly nice to see that there is significant potential rental demand upcoming for your property. And I think that it is always interesting to have a look at these areas just to see, what people are looking at and where they want to live. Generally, I would say if you were to invest in pretty much any of the suburbs mentioned here, they obviously have a high level of demand, and probably, you can read into that the average Australian would consider them a desirable place to live. So you could probably invest in any of these suburbs, and if you were going to hold for 20 or 30 years, you're probably going to make a good amount of money from it. And I just believe that's because demand, over time is going to be the, purest form of capital growth, purest driver, I should say, of capital growth and increased rents. So if you're able to position yourself in an asset that's going to have ongoing demand going into the future, then that's certainly something that is almost guaranteed to appreciate in price. But I always come back to the fact that it's very hard to forecast in the short term, and you should be playing the long game. And that way, you're almost certain to see results, but you need to position yourself for the long game. You need to be able to hold the asset without financial strain, and you need to believe in yourself. I really appreciate you tuning in today. Thank you very much. Thanks for listening to today's episode. Please subscribe to the podcast, and if you've enjoyed the show, I'd really appreciate it if you could leave a review on iTunes and recommend the show to any friends that you think might benefit. Thanks again for listening, and we hope to see you back soon.